Citibank recently predicted that gold will crash all the way down to $2,700 an ounce in 2026. Maybe they've already changed their mind. Who knows? It's impossible to understand how these banks and Wall Street come up with their forecast. Goldman Sachs just said that gold will go to $5,000 an ounce in 2026. Should you rely on them? Not if you've been tracking their misses. Meanwhile, I just released a video saying gold is on track to go to $10,000 an ounce. So who's right? Listen, this isn't just about Citi. Wall Street and the big banks have a pattern of going from bullish to bearish like it's a game of ping pong. If you've traded against them, you probably would have been retired by now. So let's dive in and find out what they don't understand about gold. Before we begin, remember to like this video and subscribe for more economic updates. Citi's timeline says it all. In 2023, their gold price prediction was at $1,900 to $2,000. In April 2024, they predicted a bullish flip to $3,000. In April 2025, their estimate was $3,500. Then in June 2025, a total reversal at $2,500 to $2,700. And then finally, August 2025, they forecast gold rising back up to $3,500. Now let's compare their predictions to what the price of gold actually was. As you can see, they are quite a ways off very often. These aren't forecasts, these are mood swings. If you put their targets on a dartboard, you'd probably get closer throwing blindfolded. Here's why Wall Street keeps tripping over itself. Their models assume the dollar will stay dominant forever. After all, their portfolios are stuffed with treasuries. Admitting dollar weakness is admitting their own weakness. This isn't just bad analysis, this is bias. They're putting their heads in the sand while defending the very system that's crumbling beneath them. They continue to dismiss de-dollarization as hype and treating central bank gold buying as a footnote, as they focus on next quarter's optics, not long-term reality. Wall Street keeps telling you the dollar is invincible. Meanwhile, central banks are voting the opposite way with their money. That sounds like denial to me. The facts are straightforward. The Federal Reserve recently lowered interest rates by 1/4 percentage point. The dollar index has fallen 11% so far in 2025, its worst first half performance since 1973. Gold now constitutes a larger share of foreign central bank reserves than U.S. Treasuries for the first time since 1996. For the past 3 years, global central banks bought more than 1,000 tons of gold and are on track to do it again this year. Every single fact points to the same direction: the dollar losing trust and gold gaining importance. Here's the reality. Central banks keep buying. New cross-border payment systems are bypassing the dollar and leaning on gold. Investors are following as gold's price is up over 50% this year and the dollar's down. At the end of the day, banks have missed their mark on their gold predictions. Some say it's due for a correction, others say it'll continue to go up. Meanwhile, the people who actually run the global financial system keep filling their vaults with it. Bottom line, the elements that are driving the prices of gold and silver up are not changing. Gold isn't just going up, the dollar is going down. Therefore, it takes more dollars to buy the same ounce. It appears mainstream institutions may be trapped in their own bias. Their world only makes sense if the dollar never slips, but the evidence says otherwise. As the dollar weakens, gold's importance is becoming clear, and Americans who see it are protecting themselves, not waiting for Wall Street to catch up.
Sign up for your one-on-one web conference with Augusta Precious Metals today. No commissions, no pressure, just education. Click the link in the description to learn more.